The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 27th, wonderful Wednesday. Happy Thanksgiving edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Thanksgiving should really be Thanks Living. Thanksgiving centers on things to give thanks for, and more importantly, a grateful mind is a mind that will eventually attract itself to great things. It's our attitude of gratitude that opens the door to abundance in our life, and Thanksgiving, if lived on a continuous basis, not just for one day, will create more good in our life, and that is why Thanksgiving should really be Thanks Living. Because Thanks Living is a way of life, and it's a way of life no matter what our circumstances are, no matter what challenges that we may face. You see, perhaps the most difficult, yet most powerful of all, is to give thanks for our problems or our obstacles or our challenges. The reason is this: as we face our situations and overcome them, we become stronger, we become wiser, and we become more compassionate. Something to think about. You know, we learn mathematics by solving problems, and we prepare for an athletic event by practicing against a strong opponent. Have you ever played a game of chess? Who would you learn more from, a stronger or a weaker opponent? Exactly, a stronger opponent. And we can learn more from a larger problem too. Be thankful and be grateful if you have problems in your life, folks. An ancient proverb says, a donkey may carry a heavy load of gold. Of course, I added the word gold. It's sandalwood, really. But a donkey may carry a heavy load of gold on its back and never know its preciousness, only its weight. Sometimes we feel the weight of our circumstances and lose sight of the precious nature of the many gifts of life. Adversity, folks, when overcome, it strengthens us. And therefore, we are giving thanks not for the problem itself, but for the strength and knowledge that will result from our experience or experience what we are about to have in our life. Perhaps we should give thanks ahead of time, for we will grow, we will get stronger, and we will overcome every challenge we face. Thanksgiving, folks, it's really all about thanks living each and every day. I and each of us here at TFNN, we wish you and your families a happy Thanksgiving, and most importantly, a happy Thanks Living. Let's go check out these markets out here right now. We've got Dow futures up 23 points. They're trading out at 16,083. The S&P futures up 2.25 points, trading out at 1804.25. NASDAQ futures up 7. NASDAQ has been strong. It has finally woken up. It's trading out at 34.54. Russell 2000 up 1.5 trading at 11.35. King dollar back 10 cents right now, trading out at 80.53. A bit of movement in the currency market. In fact, quite a bit of movement inside that favorite currency pair of ours, the euro, Japanese yen. So we'll take a look at that. We'll start off by taking a look at that. Goldilocks up $8 right now. That's trading out at 12.49. We've got silver up just about 5 cents. That's trading out at 19.90. Light sweet crude back $1.27, folks. That is trading out at 92.41. Our call-in number 877-927-6648. Give us a call. We'd be happy to take a look at your stock chart, anything that you need. Let's start off by taking a look at that euro Japanese yen. If you're watching us on TigerTV, you can see my chart. Maybe you're listening on the radio or your mobile device at tfnn.mobi. We appreciate that. And remember, you can always catch the live stream of this show by going to the homepage of tfnn.com. Over on the upper right-hand side, you'll see a button, 3 little smart phones type devices. Click on that. The show will stream live. And what we're looking at here is the euro Japanese yen. It was trading in a sideways consolidation. In fact, you see several beautiful patterns out here on my screen. This is truly a great chart for pattern recognition. And these patterns traded well. You had all the way back here in the time frame of July 24th, we made a nice 0.786 Gartley sell pattern. That worked. Price did what it was supposed to, which was pulled all the way back to the 0.618 retracement level. That then set up a Gartley buy, a 0.618 Gartley buy. That's this little yellow pattern. That then went ahead and expanded into this 1.618 butterfly. Now, got to the 1.618 butterfly, and we had a triple top test. We had a consolidation pattern, and the Euro-Japanese yen really busted through with wide price spread, real conviction. That candlestick on November 21st, that set up the move that would be a measured move, equal to or greater than the actual consolidation. Well, you can see, if we just take that yellow-colored box and we add it to the top here, you can see that it also would be forming a 1 to 1.272 A to B equals CD. Now, here's the key, folks. The measured move, or the A to B equals CD, that's just one level. Remember, it's going to be equal to or greater. Now, what's interesting about our markets here, especially over the last couple of days here, what's really interesting is right now Dow futures are up just small, 20, 21 points. S&P really not budging a whole lot out here. Hasn't budged. The markets haven't budged for a few days. But the Euro-Japanese yen, it's taken off to the moon out here. So I don't know if we're going to see a little bit of catch-up here. Or remember, this is a directional indicator. It is not a tick for tick. Doesn't mean one tick up in the Euro-Japanese yen is equivalent of X number of points or anything along those lines. But what I can tell you is that if you're expecting the market to crash from here with the Euro-yen pointing in the opposite direction, if our market does pull back and the Euro-yen keeps moving higher, that actually presents a buying opportunity, not a selling opportunity. We can go take a look at charts. In fact, I'll go ahead and do that for you right now. I'll move over. We'll take a look at one of our charts here where I compare the Euro-Japanese yen against the S&P 500. There we go. Just got to find where I have it hidden. I've got so many tabs out here. That happens to be the chart of high-grade copper, but let's not look at that. Let's instead take a look at the S&P 500 and the Euro-Japanese yen, and we take this back here, and this pattern has really been working for quite some time. And what you see on my chart here at the bottom of the screen, the red squiggly line, that is the Euro-Japanese yen. The top portion happens to be the S&P 500. Anytime you see divergence out here, now it doesn't tell you when things are going to turn, just tells you when it does turn, it's going to turn in the direction of the Euro-Japanese yen. So here, the markets were moving down between December 18th or so, 2012, all the way down to right coming into that fiscal cliff. Now, how about using this chart here, knowing that we were coming to, well, this would be one of the charts you'd be looking at, knowing that we were coming into the whole fiscal cliff, and what the Euro-Japanese yen was saying doesn't really matter, folks. The way that this market will resolve itself is in a upward direction. Well, that was back in December 28th. The market hasn't really looked back since then, or really, in our case here, the market's actually moved higher with conviction on January 2nd. We came back from New Year's out there, and the markets just simply haven't looked back from then. But anytime we see some type of divergence in the Euro-Japanese yen, and we're not seeing it here right now, the market will resolve itself in that direction out there. So in this case here, this says that the markets should move higher. Maybe they move higher today. Maybe they move higher on Friday. But the Euro-Japanese yen has most certainly moved higher with conviction as we take a look. Now, let's go take a look at the intraday charts. In fact, let's take a look at the euro itself. Let's go see what's going on with the queen out here. Now, not that we want to make today's show just about currency, but it is currency that does move the market. So let's take a look here at the where is that one? Oh, the euro. We're going to take a look at the euro-US dollar. So many people trade that. Now, as many of you know, here's just a blank chart. Well, the bottom of the chart shows our 14-period relative strength indicator out there. So that helps us to understand when the markets are either overbought or oversold. It works on any index, ETF, time frame, currency. It doesn't really matter what it is. And you want to certainly understand whether the market is overbought or oversold. Now, I've created a tool. I'm going to provide this tool to folks as soon as it actually is complete out here. Lets me on any chart just actually go ahead and run the primary trading ranges. Now, what's cool about the primary trading range is it sets up areas of horizontal support and resistance out here. So see, just a quick click of the button, and it automatically applied that to my chart. Now, the black line that you see going across my screen here, and all it's doing is take a look at the screen data. So whatever data you put on there, it's going to go find the largest number of co-located opens and closes and do it instantly. And that's really the dark line. That's the black line out there. That's the what we'll call the super or the main primary trading range. Now, in the case of the euro-US dollar, what happens is these horizontal areas, they act as natural areas of support and resistance. Once you get through one area, typically what you like to see it do is come back and test it. If we take a look at the euro, and tell me if this would have helped you if you were trading the currency pair. Take a look at the euro as it's trying to break through the level right about the 135.58 area. Finally came back and tested it here at 11 o'clock last night. 2100, that would be 2400. 11 o'clock that would be 9 o'clock in the evening. Formed a nice little bullish engulfing candle and boom, off to the races. Now look at as the euro punched up into the highs here this morning at 5 a.m. Look where it punched up into. And look what held as a resistance area. That's right, it's next primary trading range. So we'll watch the euro here today. We'll see if it can bust through this area. If it can bust through that area, then it will move all the way up to the next area, which would be about 136.5. Now that's what the 30-minute chart is telling us. You can see it's neither overbought nor oversold. And if we go take a look at a little bit longer-term chart, let's take a look here at the weekly chart here. Weekly chart shows we had some nice resistance, some nice support, I should say, at the bottom of this rising price channel. When we come back, we'll finish taking a look at the euro-US dollar. It is Happy Thanksgiving, and we wish you a happy Thanksgiving, folks. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Really no change here in the futures. Dow futures still up 24, S&P up a couple of points out here. So we were looking at the euro, U.S. dollar. Actually, we've been looking at a couple currency pairs here this morning. We're taking a look at the euro, U.S. dollar right now. And what I've done is I've switched over to the weekly chart. Now, the week hasn't come to an end or anything, but as we take a look at the weekly chart, you can see the two competing trends, the two competing price trends. You've got the larger one. That's the descending price channel. That price has been traveling in ever since the 2008 highs out here. That's the red line that you're seeing. The more important red line to be paying attention to is the one up at the upper boundary level. As the euro was making a high back here the week of October 25th, we can see how well that held as a resistance level. And then price moved all the way down into this rising price channel out here, coming off of the lows back in 2012, July 27, 2012. That's the blue diagonal line that you're taking a look at. Price came down and held that area. Looks like we're having a little bit of a ping-pong game here inside of the euro. So if we take a look at where we're likely to take a look at the euro moving to, if we go from the high down to low and just take a look at natural retracement areas, you'll see that the 0.618 retracement, I'll go ahead and explode this out for us, is a 1.3626. The actual high we have seen so far is 1.3611. So that's pretty darn close. And as we were taking a look at the shorter term, the 30-minute chart, we took a look at where shorter term resistance was at. But what this looks like to me at this stage, now you can see this wide-ranging bar here, the weekly bar from November the 11th. It's moving down into, it looks to me like what we should see here inside of the euro, if in fact it can get above the 136 level, should move up to the top of this red line again, the top of this descending price channel, which will likely be around the 0.786 retracement, somewhere right around the 137.16 area. So I'd say that the euro is up against a normal area of resistance, the 0.618, or very close to that range. Is where usually where you start to see some people get off of an elevator. You want to be paying attention to those Fibonacci contraction numbers out here, and that's really all that we're taking a look at on the weekly chart for the euro. As long as we're in here, let's just take a look at the monthly chart as well, see what we have going on, because, the monthly is really the, when you take a look at trends, you want to make sure that you're taking a look at really several different levels. If you're trading a daily contract or a daily ETF, you want to understand what's going on in the weekly and the monthly, and as well as what's going on underneath it. Now, if you take a look at this weekly chart, the monthly chart for the euro. Now, all I'm showing here, this red diagonal line is the trend line. And as we take a look at the month of October, that's not a reversal candle. That is not a shooting star candle. Too much of a wick at the bottom of the candle for the monthly. And you can see here during the month of November, who's got control of this session, the bulls or the bears out there as we take a look at it. So we can see that there's, and to answer that question, it's the bulls. So as we take a look at the euro, you can see right here's the month of February 2013. That formed a little bearish engulfing candle. That says that you've got some strong resistance. Well, you do use a black line, the high of which is from February 28th is the 137.05. 109-ish level. But when we take a look at where we're at, and, it's November the 27th, so we're towards the end of the month here. And what I can tell you is when we took a look at the weekly and we saw that big reversal there, as we look at a monthly chart right here, this actually tells me that from the longer-term trend right now, it is still the bulls that have control of the market when it comes to the euro-US dollar. So that means if we were to go back and take a look at the weekly chart, take a look at the intraday chart, it says to me we should actually expect higher price. We should expect the euro to bust through this 136.26 level, the 0.618 area, and most likely move up into 137.16. So that's what I would be taking a look at if I were trading the euro-US dollar currency pair. Now, we mentioned light sweet crude here. I mentioned it was back at $1.24, and it has shown some weakness. The black horizontal line going across my screen, which is right around the 93.14-ish range, you're trading at 92.44. That also is a primary trading range boundary line, and that is the largest number of co-located opens and closes, and you are trading below that. So light sweet crude, it's back in this very narrow banded descending price channel out here, and it's going to at least attack the 91.31 level. But more than likely, it should move all the way back down to the swing point low around 88.51. But its next stop and where it's going to find some support is going to be right around 91.31. That is the 0.786 retracement, and that is on light sweet crude. If we take a look at Goldilocks right now, gold is up about $7. It's trading down at $12.49. It had that nice key reversal session back here a couple of trading sessions ago on November 25th. Yesterday really trying to erase that. So we've got a little battle here between bulls and bears. What we do know about Goldilocks is it came all the way back and it tested that June 28th high. Did it on lighter volume. 877-927-6648. We'll be right back with this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. Now up 7. It's trade out at 16,089. The S&P up 2, traded at 1804. As I mentioned in the opening session, the NASDAQ Composite yesterday closing above the 4,000 mark. It's trading right now at 4,027, so it's off to the races. Big day in the NASDAQ Composite and the Russell 2000. So most of the media really just covering the Dow and the S&P and the mere fact that it came back, to basically an unchanged session out there yesterday, but not the case in the Composite and the Russell 2000. We've got Apple. That's up $6 this morning, trading out at $5.39. Microsoft is up 21 ticks. Google up about $5, trading out at $10.63. Lead the charge, the upside, in fact, is Apple. Right behind them, you've got GWPH. That's GW Pharma. That's up about 11% here this morning. That's up $3, about $4 right now. I don't see the news announcement behind it. Amazon, amazing Amazon. That's up about $2. Hewlett-Packard, HPQ. I believe they were out with numbers. Let's see what their numbers look like here. They had net earnings of $1.4 billion versus a loss of $6.9 billion from last year. So not too shabby there for the quarter. Let's see if I can find the quarterly numbers here. The net revenue, $29 billion versus $29.86 from a year ago. So for their fourth quarter, just slightly under. Needless to say, they are trading up about 8% here this morning. Foster Wheeler, FWLT, that's up 6.5% here this morning. No news behind that. Green Mountain Coffee Roasters, that's percolating. It's up $1.76. Baidu up $1.11. To the downside here, you've got Info Blocks. BLO6. That's a ticker symbol. It is trading down on numbers. They had revenues of $63 million. How about this? From their first quarter, they did revenues of $63 million versus $5.8 from the prior year. Man, you want to talk about widening top-line growth out here. Their net loss for the first quarter, though, $2.5 million versus $2.39. So they've stabilized that. But, man, with that revenue growth out there, they weren't able to do too much. You've got BioReference Labs, BRLI. That's off 13%. Tilly's, Inc., TLYS. They're down 26%. Tilly's posted net income of $6 million versus $9.29, and net revenues of $123 versus $124 million from the prior year out there. Celgene off a bit this morning, down $1.68. Zales Corp, the diamond folks out there, they're down about 10% this morning. Interesting. Zales posted a loss of $27 million versus a loss of $28 million for their first quarter. Now, of course, their big quarter is going to be this next second quarter right here. So this is their big number. They're coming into their season out here. Now, let's take a look at some of the prior Thanksgiving days, since we're dealing with Thanksgiving as we speak here. And if we go back to November 22nd, 2012, we just kind of take a look at, we'll go back to the last 3 or 4 Thanksgiving holidays out here and take a look at from Thanksgiving forward, just simply meaning Thanksgiving through the old Santa Claus rally out here. So November 22nd, you saw the S&P 500. That was Thanksgiving. On the 23rd, opens up at 1391. You can see the day before, kind of a narrow banded range out here, and the day before being today on Wednesday. Of course, we've had several narrow banded ranges the last couple of trading sessions, but boy, on nice move out on Friday, which tends to be an up day anyways. Well, let's go see if it tends to be an up day. So November 23rd, as we came back from the holiday. Now, that market ran higher all the way until a little bit of a retracement back here, obviously into the cycle of the fiscal cliff, and then certainly through, of course, through January, through the rest of the year, the market ran higher. So that was in 2012. Let's go take a look at Thanksgiving in 2011. Now, Thanksgiving 2011 took place on November the 24th. Now, November the 24th, the market was moving lower. I don't recall what the scare was back at that time, but boy, on November 25th, on Black Friday out there, it moved just a tad lower, and that cemented a bottom, created a nice reversal signal. In fact, the black diagonal line, if I pull this back here on my chart, that black diagonal line, that's taking us off. That's the rising price channel, by the way, coming off of the lows in 2009. So price in November of 2011 came right down, tested the bottom of the rising price channel. As we came back on November the 28th out here, now November 25th, the day after Thanksgiving, not a whole lot, but boy, must have been a real positive sales sign out here. There certainly was a Santa Claus rally. The market actually made a big bottom in Thanksgiving in 2011. I don't know, is the third year a charm out here with a large bottom in place? I know might not make sense with the markets moving higher, but as we take a look at the different stock charts as we did yesterday, things are long and strong. Let's go back into the 2010 time frame out here. November 25th, 2010 was when we were celebrating Turkey Day out here. Market moved a tad lower on the 23rd, but I'm sorry, on the 24th it actually moved a bit higher. Moved down just for a couple of trading sessions, and the market really took off on December 1st out here. But right around Thanksgiving, it had set up a pretty darn nice low out there. And certainly there was a Santa Claus rally. Took you all the way into February, the middle of February, February 18th, before we saw any pullback. So there's 3 times is a charm. Let's go back. I think I might have November of 2009 out here. I do have November of 2009. Maybe I even have 2008. I don't recall. Now, November of 2009, Thanksgiving fell on November 26th. Let me actually do it like this. This might be the better way to take a look at this. I'm just going to change my labeling system out here. So we want the top left frame out here. Let's go ahead and do it like that. This will be a better way to mark the box. Okay, so we're dealing with November 26th. It was Thanksgiving. November 25th, market moved up a bit. Black Friday, as we came back on the 27th, the market made a low. That low marked the low of the Santa Claus rally that took us all the way into the highs into the middle of January out there. Now, it wasn't a substantial movement, but it was a movement nonetheless. The low came in at about 1083, and the high came in right around the 1150-ish range inside the S&P. So there's 4 in a row with regard to the old Santa Claus rally in the beginning of it, because Santa arrives on the in the parade. If you were up in Detroit, it would be the J.L. Hudson parade. I don't know if they still do that anymore or not, but let's see if I can go back. I don't know if I've got, I got 2008. How about that? So as we take a look at 2008, in fact, what we ought to do here is we ought to change this around just like I did on the last one. Let me just change my label on here, then I won't have to do that again. So we want the upper left where my arrow is going to be X marks the, well, I didn't do that. I didn't grab the right thing. Let me do this accurately. Let me pay attention. The top frame, that's what we want, the top frame out here. There we go. So in 2008, we had Thanksgiving fall on November the 27th out here. So November the 27th. The 28th, the market made a bit of a high, which was the day after. Boy, it looks like it's a little bit of bad news or so on that Monday as we came back in. and that marked the low. We saw a Santa Claus rally with the market moving higher into January 6th out there. That was even, during the 2007, 2008 market crash. The market had not made its low until March 2009, but yet still during that time period, there was that so-called Santa Claus rally coming in through the November timeframe. Let me see if I've got 2007 marked. Oh, I do, as a matter of fact. How about that? Now, in 2007, now we know the market made its highs back on October the 11th, 2007. Now, the key here, folks, is that there's not a single market that you can point me to where we won't find a reversal signal up at the top. And that's really the key. So, they talk about catching a falling knife. I don't know. What do you call it when the market is moving higher and you're trying to sell the top? I don't know. Is that death by 1,000 cuts or what have you? Here's the key thing. Wait for the market to actually tell you or give you some type of signal that it's making a reversal out there. That's all you got to wait for. What does waiting 2 days, quite frankly, is what I think you should wait. The first day is your signal. The second day is, hey, what happens after that signal? Do you have any kind of follow-through? Well, now, if we go back to 2007, I hope somebody's keeping track of this. I'm pretty sure we have found Santa Claus rallies. The Thanksgiving occurred on November 22nd. In 2007. Now, November 22nd, 2007, the market here, where is it, November 22nd? Let me get back to the day. November 21st, the day before, the market moved a bit lower. We came back here. We came back from the holiday, nice and full. The market moved up on Black Friday. On Monday, came down a bit. And then, boom, the market was off to the races. Santa Claus ran on. In this case here, the Santa Claus rally only lasted until the middle of December. Made that final 0.786 Gartley sell pattern. But here's the deal. As it was making that 0.786 Gartley sell pattern, that was on December 10th out there. Big old key reversal session that took place on December 11th. And that's all that we need to do is we need to wait for reversal signals in the marketplace out here. So at this stage, I would have to say that things bode pretty darn well for the market. Why do I say that? Well, yesterday I got a number of emails from folks, so thanks for all the emails. I love getting emails from individuals. I shared some of the different scanning tools that I have created, some of the different new charting tools that I have created, really to overcome, any issues that I have had in the market, because I always like when I miss something, I want to understand why did I miss it, and not just why did I miss it, but how can I avoid missing it in the future. And so here's the S&P 500 chart, and right now what we can see here, yesterday was a little bit of a doji, it was not a little bit, it was a doji candle. Now the sessions that you're seeing here marked on my screen, this is the strictest criteria for Japanese candlestick charting that there is out here. So it has to. I could put the non-strict criteria reversal signals out here. We'll see more signals in the marketplace, but I like also really taking a look at the very strict criteria. Now, what occurred yesterday in the market was a doji candle. Now, doji candle up at resistance to me has a ton of meaning out here. All that we really do have to pay attention to today is how does the market behave, because if that's which it is a resistance area, by the way, and it says that the high of yesterday, which is at 1808.42. If you get it close above 1808.42, you don't have to worry about that doji candle. It tells you that prices want to move higher. We are in a very strong bullish market, very strong. And right now we're in, and when it comes to the S&P 500, we're in that strongest leg possible. The light blue areas on my screen, those are very strong legs out there, folks. Very strong legs inside of the market. So that's what's going on inside of the S&P 500. If we go take a look at the NASDAQ composite, let's do that here, because the NASDAQ composite and the Russell 2000 have been showing us some weakness out here. So we want to take a look at what does that weakness really look like. Let me pull this back here. I'm just going to try to widen this here. I'm just going to try to widen it. Makes it a little bit easier for you to take a look at. Now, with regard to any kind of reversal signal inside of the NASDAQ, it was right here. It was this key reversal session, which, by the way, it did have some follow-through on that very next move down. Now, and if you're watching on my screen here, what you can see, all that did was that just as a cautionary. It wasn't a sell zone. A sell zone is when you really get into the red area, but it tells you that you really want to go ahead and tighten up your stops out here. But that was certainly a sell signal. That meant that that was also a resistance area. The top of which is, by the way, and it's November 18th that we're looking at, the high is 39.94.97. Hey, we're at 4,030 now. We're up and over that resistance area. And any move back, that's the area that we want to pay attention to as an area of support. And that number, again, is 39.94.97. So if, in fact, you see the composite drop below 4,000, that doesn't mean that it's a rejection of the 4,000 level and you should run for the hills and sell or anything. What you want to do is you want to be paying attention to this old resistance level. We'll see if it becomes new support, if and when it gets tested, and the high of which is 39.94.97. But as we take a look here at the composite, which had been acting weak to a certain extent, in that it gave us a couple of maybe cautionary signs out there, not sell signals, but just cautionary signs. You can see that this is in a nice, strong move up. In fact, getting above this candle right here on November 7th, the high of which was 39.38.33. That put the NASDAQ composite right back into a nice little buy zone out there. So that's on the composite. Let's go take a look at the Russell 2000. That was off to the races yesterday. We'll go take a look at the ETF structures out there. In the case of the Russell 2000, its area of resistance was all the way back here on October the 30th. And that was a key reversal session. It was also a bearish engulfing candle, the high of which is 1123.30. And you can see that it closed above that right here on November 22nd. And then yesterday off to the races. Nice wide-ranging bar to the upside here inside of the Russell 2000. So, you know, what had been two of our weaker areas, what they have shown here is absolute strength inside of the marketplace. As long as we're here, let's go take, the SOX actually yesterday. I meant to take a look at that this morning. I didn't. For my newsletter subscribers, the SOX here yesterday actually closing above a bit of a... let me see, I was looking for, no, it hasn't closed. I'm looking for the SOX here to close above, for a real nice potential buy, is close above the November 18th high. That number is 509.71. You're trading at 506.64. It's not in any kind of bearish territory or anything, but I would like to see the SOX, the semiconductor index, go ahead and participate in this move. Let's see, what did we not take a look at? Well, how about the Dow? Let's go take a look at the Dow and then the transports as well out here. Well, we'll have to do that when we get back from this break. Right now, we've got the Dow is up 26 points, S&P up 4. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 27 points right now. S&P is up 5. So it's going to be interesting to see how this all plays out here. You know, go ahead on the screen here. This is this combo screen that we're looking at. You've got the euro, Japanese yen. That's on the right-hand side. We're looking at 2 30-minute charts out here. You can see this thing really taking off with conviction at 9:30 this morning to the upside. We are seeing our market also move a bit higher. Now, the key here, area of resistance inside of the S&P. This is the 30-minute chart we're looking at. So again, the blue horizontal lines going across my screen here, those are the primary trading range boundary lines. You can see we're trading right into that area right now, 1805. It's above it. It needs to clear 1809. 1809 and a quarter is a area of resistance out here. That's the high so far that we've seen inside of the ES Mini. So a move up to 1809, really, quite frankly, a close above 1809.50, even coming back and testing the 1805 level, rejecting that area. That goes ahead and says, you know what, you could easily see the ES Mini today make a move all the way up to 1820. Certainly 1813 is in the cards. That's the midway point inside the primary trading range boundary lines of the 30-minute chart for the ES. It has full clearance, as far as I'm concerned, to move higher because I'm in a long position in the ES. So it certainly has my authorization to move higher. I'd certainly like to see that out here. But, it's also got the authorization of the euro, Japanese yen out there, the best directional indicator that I know of inside of the currency markets out here. Now, from a support standpoint, that's pretty easy. That's going to be the hammer candle. That took place here coming into the 4 o'clock close. That was on November 25th, the low of which is 1798.50. What's interesting is we did see a test of that area at 10:30 yesterday morning. We saw the market get down to 1798.75. So it was a test of that hammer candle. The hammer's been tested. It held. That says that there's very strong support at 1798.50 in the marketplace. Can't tell you whether today is going to close like yesterday and the day before, which is a little unusual when you consider the bullishness of the marketplace, where, maybe a little bit of jitters out there. But intraday, we should at least see 1809 and a quarter tagged, and a close above that, folks. That says that we ought to be looking at the move to about the 1820 type level inside of the ES Mini. So we'll see how all of this is going to play out. What do we want to take a look at here? Oh, you know what? I'd switch over to the 120-minute chart here, because the 120-minute chart on the ES Mini, this also shows here the red diagonal lines that you're looking at on my screen. That is the rising price channel coming off of the time period of October the 9th out here. So we can see here is price pulled back into this morning here, pulled back into the bottom of that rising price channel. It's another reason to suggest that, okay, it's tested that level, and it's time for the market to actually move higher from here. So we'll see how that all plays out today. Inside of some of our core holdings, let's go take a look at Apple. That is off to the races here. That is up to $9 right now. Apple has a confirmed A to B equals CD. That's what it wants to do. That confirmed A to B equals CD, that took place quite a while ago. It took place on October 22nd. The price move on that says 572. You're at 542 right now. That all bode well, really well, for the NASDAQ composite, for the NDX 100, as it still is the largest weighting inside those indexes out there. So we should see about the 572 area before Apple gives us our next signal. Folks, it is our Happy Thanksgiving edition day. Happy Thanksgiving. And what I want you to do is just, everyone that you come in contact with, I want you to say something nice. I want you to find something nice that you could say, because you have no idea whatever they might be going through. Maybe some kind words are all that they'll need to just lift them up and take them to the next level. Thanks so much for being here. Folks, have a happy Thanksgiving. We'll look forward to seeing you on Monday, or actually in just a few minutes. Take care.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.